BTC volatility is building, however market sentiment might be shifting. Overnight Bitcoin corrected 2%, wiping out all of yesterday's gains in a bizarre move that mirror reversed yesterday's break up. Yesterday at 1 a.m. time, we saw this 2% breakout from our symmetrical triangle. And this morning at exactly the same time, by exactly the same amount, price corrected fully. So yesterday we saw this breakup. The speculation's rife that this pump was in reaction to the news that Hong Kong, a major investment hub, had legalized crypto investing. We saw price break up through the upper trend line that we defined and anticipated that we'd retrace to the top side of the trend line, retest here and then bounce, which is the standard sort of formation of a breakout. However, instead we got this breakdown all the way to our lower trend line. The good news, I guess, is that price is respecting the trend lines that we've drawn in throughout this move, which at least means that we position them correctly. However, it does muddy the technical expectations from this point. If we stay within this range between the two converging trend lines, then we'd look to take a long position here, targeting the upper trend line as the take profit target. However, there is an argument that breaking down as we did has invalidated the symmetrical triangle, and that we need to relook at our price formation. Although I think that even if we were to do that, we would end up with just a slightly larger version of the range that we already have. Something probably a bit like that. The real lesson, I think, is how these technical setups require macro news to give a directional bias. The news from Hong Kong fulfilled the breakout we expected, giving it a bullish direction, and it now looks like the breakdown may have come from some macroeconomic analysis, this time from Jamie Dimon, who's the CEO of JP Morgan. So yesterday he was doing an event where they were addressing investors, the JP Morgan Investment Day, and he indicated that his firm expect interest rate hikes to continue. We know from the CME FedWatch tool that the majority of investors, at least 71.9% exactly, expect there to be a rate pause at the next rate hike date in June. However, the percentage chance of an interest rate hike of 25 basis points has been steadily increasing, and it increased 5% after Jamie's announcement yesterday. Given that Jamie's probably very well connected as the CEO of JP Morgan, I think he'd be very unlikely to mention the possibility of further rate hikes affecting his business strategy unless he has at least some knowledge of rate hikes continuing. So I'm going to expect this to shift, and we're going to see a greater percentage chance given to an interest rate hike, and it will make the CPI data for May incredibly important. With price back in this indecisive range, I think the best move here is to play wait and see. The good news is that from all this that we're seeing volume being drawn back into the market. We're extremely bullish long term, and you can check out the past BTC analysis videos to see the analysis behind this outlook. Principally, we're looking at our growth curve model and these pi cycle reversals and pi cycle bottoms. We post daily on our free Telegram channel, and you can go to our website to sign up for a 7-day free trial, either of daily crypto signals, which just come straight through to you, fully complete with entries, take profits and stop losses, or you can gain access to the indicator and the strategy that we use to create those signals themselves. Got any questions? Drop them in the comments below. Thank you very much. Bye.